Hey everybody, it's Trish May with Keller Williams Integrity and Craig Collins with Sierra Pacific Mortgage Company. We are your American Dream team. We are ushering in the spring of 2021, 12 months after we have been sort of in a pandemic situation in life and in particular in real estate. But we're 12 months into it now, a whole year, and there's a wink and a nod that things might be changing a little bit from what we've been talking about all year. Craig, what have you found on this?
Well, on the financing side of things, like you said, we are starting to see a shift. There's a lot of volatility in the market, and that's leading to interest rates slowly climbing. Generally speaking, historically, rates are still low. We're still in the threes, which is a great interest rate. But referencing back to, even just a couple months ago, it has started to increase. So if you're homeowners that have been in the market, what does this mean for you? It means your purchasing power may be impacted. When interest rates go up, more of your monthly payments going toward the interest versus toward that home. So you might be in a different price point when you're shopping, or folks that were on the line before may want to make sure that they still qualify. Interest rates, drive approvals, honestly.
That's a great point. So, Craig, what are some factors influencing this change?
So, there's a lot of things that play into interest rates. So it's hard to really attribute it to one thing. A really large driving factor right now that we're seeing, lead to this interest rate change is inflation. We've seen inflation kind of pick up a little bit quicker than expected. And with inflation, interest rates rise. Rising inflation, interest rates follow. And why that is basically because with inflation, the dollar earned is worth less. You know what I mean? So with a fixed rate, something like a mortgage, the money earned off of that is a little bit less. So it's a less attractive investment for folks, that invest in mortgages and bonds and mortgage-backed securities. So the way that they remedy that is they increase the interest rate, and that leads to higher yields, and in turn makes it a little bit more of a attractive investment. And mortgages are sold on the secondary market. That's how lenders kind of can do more loans, right? So when they take a loan out, they sell it to investors. They take that income, and that allows them to fund more loans. If there's no investors interested in purchasing these, mortgage-backed securities, the whole process really kind of grinds to a halt. So it's kind of a give and take. And right now, with the inflation, we're giving a lot in the interest rate department. We're seeing rates increase, and it's just kind of the nature of our market right now. We hope to see inflation cool off and kind of pull back. If that's the case, then we'd likely see rates respond and improve, come down a little bit. So if you're out there purchasing a home, just be conscious of that. When you do go under contract, that's when the real fine tuning comes in. When you need to watch the market, watch the bond market, and lock your rate effectively and strategically, and you can take advantage of the dips. So I don't mean to scare anybody or encourage them out of the market. It's still a great time to buy a home, but it's time to be hyper aware and really tune in on this, because things are changing. So day to day, week to week. So it's just something to be aware of. That's all.
Yeah, definitely so. I mean, this might be, I don't know, is this good news for anybody? It's harder on buyers, but that means less competition for sellers potentially, but who's it good for?
So I guess increased interest rates, if you're a buyer, are kind of a bummer, right? Because you're, like I said, you're focusing more of that money toward the interest versus toward the home. In saying this, it might cool off some of the demand we're seeing. So I know you're familiar with these bidding wars and these highly competitive situations we're in. So as kind of terrible as it sounds, with these increased interest rates, some folks are not going to be able to qualify for loans anymore, and they're not going to be able to purchase those entry-level homes or make that step up. So as it on one side of the coin is bad for buyers because interest rates are rising and their home might cost them more. On the other side, it may open up a window for them to contract or not have to compete as much with maybe less buyers out there actually competing for the homes. And with the spring market, maybe more homes will be coming on, more inventory, and we'll see that alleviated from that side as well, hopefully.
Right, right. Hopefully so. Well, I know of plenty of buyers who will be, if they're secure in their buying position, they'll be happy to know of the less competition. But
Mhm.
I do think your point is well taken that folks who have started to get pre-approved, you really ought to check in with your lender now. Check in with Craig, give him a call, make sure you are still, make sure things still work with the rising interest rate. That's a
Absolutely.
good point. Yeah.
And then again, it's extremely important to work with somebody who's going to be able to advise you after you go under contract too, because locking an interest rate on the wrong day can cost you thousands of dollars. You need to be very strategic, and you need to be, with your finger on the pulse so you can, lock effectively and and make the market work kind of on your behalf. So that's a big part of it too.
Yeah, really catching the right side of the volatility in the rates makes a big difference, doesn't it?
It doesn't always work in our favor, but like I said, if we're hyper vigilant and it does, we can pull the trigger and take advantage of it. And if not, we can at least put ourselves in a position where it's not going to get any worse, and we can kind of stop the bleeding per se.
Yeah. Well, sometimes that is a good thing to do. So,
Right.
well, that's the best we can do.
So we're definitely in the
Okay.
locking bias, right? If you're comfortable with your monthly mortgage payment, don't play the market. It's too volatile right now. Lock that rate if you're comfortable with it, and move forward. That's always my advice to my clients, especially in this kind of market environment we're experiencing now.
Yeah, right. Great advice. Absolutely. Okay, good, good. Well, that's a great introduction to our spring mortgage season, I think. And we will hop on again to talk a little bit more about spring topics next week. Anything else you wanted to add before we go?
That's it. We'll keep everybody informed as the market changes, and help you guys be the most competitive buyers possible.
Yeah, absolutely. Market happenings. They're getting fun. Change is always good. Well,
Absolutely.
at least it's interesting. Okay. Well, everyone, thanks for joining us again, and we'll look forward to seeing y'all next week. And if you have questions or comments or want either one of us to contact you, please just put your information in the comments below the video and we will get right to it. We look forward to meeting all of you.